Hello everyone and welcome to another edition of the Forex Technical Market Update. Okay, in this update we're going to speak about probabilities and mathematics. I know in school I was the student that hated mathematics. I really wasn't good at it and I didn't really like it. But in order to be successful in the markets, you have to have some basic understanding of probabilities. Now, over the last couple of days, I've been saying that when we enter a triangle, let's say we enter a triangle, the market is trending down, or the market is trending to the downside, and the market then consolidates. What happens is that when the triangle is formed, I said that the probability is that 80% of the time the market will continue in the direction from whence it came, and 20% of the time it will reverse and head upward. Now, that does not mean, it may seem very obvious, but that does not mean that all of the time the market will break to the downside. It means 80% of the time. Now, what I find is that a lot of traders when I say 80% of the time, or when anyone says 80% of the time it will break down, and take that as 100% of the time and risk too much on a trade. So for example, if you anticipate that this market will break to the downside and you risk 25% of your account or 15% of your account, and the market breaks to the upside, you are down 15% and on one trade, and that is just way too much to be risking on any one trade. Because when you're trading, it's not unlikely for you to have 3, 4, 5 losing trades in a row. Now if you have 5 losing trades in a row and you risk 15% on each trade, that is, your account will be down 65%. And it's very difficult to recover from a 65% loss on your trading account. So it's very important to keep your risk to a minimum. And so for example, another market that's in a consolidation is the Japanese yen USD. Now, Japanese yen USD, 80% of the time it should break to the upside, but that means 20% of the time it won't break to the upside, so it will break to the downside, and you should not risk too much on that particular trade because of the reasons I said before. A lot of traders, you'll be surprised, a lot of traders do risk way too much on a given trade. So when the inevitable streak of losses occur, their accounts are completely wiped out. Okay, taking a look at the Australian dollar. This is also in a consolidation with the theme, continuing the theme from yesterday. And we're looking, the market is finding support at the base between the 75 to 76 region. And the market is finding support. What we want to see is a clean close below this level for the market to continue to the downside. That's on the Australian dollar. Looking at the Canadian dollar, it has been very strong this morning, unusually strong, but it's coming up onto its support area near this 124 level. Again, the probability is 80% it will move to the upside, 20% to the downside. That still means that there is a likelihood that this market will break to the downside, and if it breaks and closes below this 124 level on a daily basis, we could see further selling in the Canadian dollar. Taking a look at the British pound Australian dollar, again, this is in a consolidation pattern. I'm expecting this market to challenge this 196 area, and if we can close above 196, we could see a challenge of this $2 area on the British pound Australian dollar. looking at the euro versus the yen, and this is a trade that we are currently short, or signals are currently short, I believe from about the 129.50 level. But this trade is working out pretty nicely. We have over 300 pips to the plus side, and what I'm looking for on this trade is for the market to close below this 126 low that was made yesterday. You can see we have a doji candle yesterday, and I want to see if the market has the energy to close below this doji candle, and that would indicate to me that the market has further to fall, essentially. Okay, so just remember, let me just touch on the fact of your trading system. There are trading systems out there that are 60% profitable, 55% of the trades are profitable, 50% of the trades are profitable, or 45%, even as low as 30%. I've seen a system where only 30% of the trades are profitable and 70% of the trades are unprofitable. Now, the casual person, if you ask a casual person out there, would you like a system like that? They would tell you, no, I would never want a system that is 70%, have 70% losses. But the key is, with a system like this, the losses are very small, 1% per trade. So if you have 1, 2, 3, 4, 5 trades that go against you, you're only down 5% of your account. And then when you do have a trade that goes in your direction, it will more than make up for these small losses. And that's how you can have a system that's 30% accurate and still make money. So let's look at the 30% accurate. Let's say, for example, our average trade win is 3 points and our average trade loss is 1 point. Over the period of 10 trades, 30% of them are accurate. 1, 2, 3, 4, 5, 6, 7. So you have 7 losses for a total of 7 points, and your 3 wins, the 30% that are winning, 9 points. So you have -7 plus 9. You are still +2. So this is a system that is making money. On the other hand, you can have a system that's 90% accurate. 90% accurate. The average win is 1 point. 1, 2, 3, 4, 5, 6, 7, 8, 9. Or the average win is 1%. And when a loss does occur, it's 10%. So this is -9 or +9, sorry, -10. So you have lost money on a system like this. And this is very key. This is very important for you to understand when you're trading. So just because a system is 90% accurate or 80% accurate does not mean it's a system that makes money. And that is something you have to look out for. Now, if you want these signals and if you want to have your money start working for you and using a system that has proven to be profitable, what you can do is click on the link below this video and sign up for the signals. There's no need for you to understand trading per se. All you have to do is have a brokerage account, and the signals are sent to your brokerage account. Each trade is, the average risk per trade is about 1.5% of your account risk per trade with the account. So it's a carefully managed account, and it has proven to be profitable over the long run. So if you'd like to come aboard, click on the link below, and thank you very much for listening to this market update. I hope you found it valuable. Thank you.